Hello everyone, I am CA Pratiksha Pai and welcome to this video where we will be discussing this scheme of the Government of India wherein startups can avail loans up to 10 crore rupees without offering any collateral security and without bringing any guarantor. What is this loan? Why is this being extended to startups? Who is giving this loan? Who is giving the guarantee? What type of startups are eligible for this loan? If you are not an eligible startup, how do you become an eligible startup? And how much loan can you avail as a startup? We will discuss all this and much more. So stay tuned with us till the end of this video. India is among the top 3 startup ecosystems in the world today. We have many unicorns, many soonicorns that are startups that will soon become unicorns, and many other big and small startups. These startups contribute billions to our economy, generate huge employment, and contribute to our society in many ways. Many of these startups have huge potential to grow really big in the coming years. But the issue with these startups in a lot of cases is financial crunch, which may be due to a lag in working capital requirements or capital expenditure requirements like say machinery or other infrastructure. A lot of these startups sometimes get huge number of orders but cannot fulfill it because of the lack of necessary infrastructure. Keeping this in mind, the DPIIT or the Department for Promotion of Industry and Internal Trade's startup section announced the CGSS scheme, that is Credit Guarantee Scheme for Startups, on October 6th, 2022. The purpose of this scheme is to provide credit guarantee for the loans borrowed by eligible startups from the member institutions. So let us see who are these eligible startups who can get these loans up to rupees 10 crores without any security. And if you don't fall within this eligibility criteria, what should you do? First and foremost requirement is that you should be recognized as a startup by the DPIIT under the Startup India scheme. This is the most basic eligibility requirement. If you are going out of eligibility over here itself, what you should do, you should first apply for registration under the Startup India scheme and get the DPIIT registration number and certificate of recognition. Next, your startup should have achieved a stable revenue stream in the past 12 months and you should be agreeable to taking a debt finance under this scheme for your startup. Now, it will be assessed whether you have a stable revenue stream in the past 12 months. How will they assess it? They will assess it by taking audited monthly statement for the past 12 months. Next, if your startup wants to avail funds under this scheme, your startup should not have defaulted on any past loans taken from any lending institutions and should not have been classified as a non-performing asset, that is NPA, as per RBI guidelines by any financial institution. Also, your startup's eligibility for loan under this scheme should be certified by any member lending institutions, which means any member lending institutions should certify that your startup is eligible and your startup can avail loan under this scheme. So basically, if your startup can fulfill all these conditions, then your startup is eligible to avail loan under the CGSS scheme for up to 10 crore rupees without any collateral security. So, if you are an eligible startup, which means you have the DPIIT registration, you have a stable revenue stream, you have not defaulted on any loans in the past, and also member lending institutions have certified you. Now, can you just walk into any member lending institutions like a bank or an NBFC and tell them to give you the 10 crore collateral free loan? No. The lending institutions will assess your performance based on the past 12 months monthly statements that you have provided, and on that basis they will ascertain how much loan you can get. See, this amount that you may get might be much less than 10 crores because yours is a startup. So it can be that you may get 50 lakhs, you may get 1 crore, you may get 2 crores, whatever the banks or any lending institutions, the member lending institutions have ascertained based on your past 12 months monthly audited statements. However, as you grow in future, you can enhance these limits. But on the other hand, let us say your startup performed really well in the past 12 months and your loan eligibility itself is say beyond 10 crores, say it is 15 crores. Then what will happen? You will get a loan for 15 crores, but the guarantee cover is only up to 10 crores, and beyond that 10 crore amount, whatever loan you will get, you have to provide the collateral security for that. So in our example, if you get a 15 crore loan, you get a collateral security cover, which means you get a credit guarantee cover up to 10 crores, and for the 5 crores beyond that 10 crores, you have to provide collateral security. We are saying lending institutions, member institutions, but who are these lending institutions, these member institutions? Let's see that now. But before we go ahead, I want to just tell you we will be giving more such helpful information on our channel. So please subscribe to our channel and hit the bell icon. These member institutions include scheduled commercial banks and financial institutions, specified NBFCs registered with RBI. NBFCs means non-banking financial companies. Then we have alternative investment funds, that is AIFs registered with SEBI, who also get identified as member institutions. So these are the member institutions that can offer you the CGSS loan, which is collateral free up to 10 crore rupees. As on September 12th, 2023, we have a total of 25 registered member institutions, out of which there are 11 public sector banks, 7 private sector banks, 1 foreign bank, 1 small finance bank, 1 AIF, 1 financial institution, and 3 NBFCs. So these are collateral free, guarantee free loans, which means you don't have to provide any collateral security or any guarantee while availing these loans. But the risk cannot also be put on member lending institutions. So who takes the guarantee for these loans? The guarantee is taken up by the central government, which means the central government tells these member lending institutions that you give loan to eligible startups without any collateral. We will give you the guarantee in case of any default. The maximum guarantee cover under this scheme is 10 crore rupees. So say you have availed a loan of 12 crores and given a collateral security of say around 5 crores. Then the guarantee cover under this scheme will be limited to 7 crores. Also, if you have a loan under CGSS scheme which is less than 10 crores, you can enhance it even beyond 10 crores in the future when your performance of your startup gets better. But again, the guarantee cover will be limited to a maximum of 10 crore rupees. Also, if your startup has availed a guarantee cover under any other scheme, then when you come to CGSS, the total guarantee cover will be limited to the difference that is there between the two schemes, with the maximum limit being 10 crores. So say under any other scheme, you have a guarantee cover of up to 50 lakhs. Then when your startup avails loan under the CGSS scheme, you will get a guarantee cover of 9 crore 50 lakhs. That is 9 crore 50 lakhs plus 50 lakhs under other scheme. The total guarantee cover becomes 10 crore rupees. Now let us see in what form you can avail these loans. You can avail collateral free loans up to 10 crores from eligible member lending institutions under the CGSS scheme in the form of venture debt, working capital loan, subordinate debt, mezzanine debt, debentures, optionally convertible debts, or any other fund based or non-fund based types. So, if you fall within the eligibility of this scheme, then please make use of this and take your business to the next level. If you have any questions, let us know in the comments and subscribe to our channel for more videos like this. Thank you. This is CA Pratiksha Pai telling you, be a fintelligent entrepreneur.